26 lessons in 26 minutes in order to become a profitable trader in 2026. Let's go. So number one, direction is everything. Master it and you'll become profitable. Direction is in everything in your trading. It doesn't matter if you're looking for an entry or looking for the bias. At the end of the day, you're betting that the market is more likely to go in this direction than it is in this direction. That is a specific trade. So master direction if you want to become a profitable trader. Number two, if you can't find your bias in 10 seconds, you don't have one. This sounds very, very obvious, and for some people might even sound far-fetched, but you'll notice that most of your bias is very, very obvious. The best bias is the one where you know that the market is slapping you in the face saying, we are going in this direction. And very, very likely, if you can't tell exactly where the market is going within the first 10 seconds of looking, for example, at the daily chart, then the direction is not as clear. The bias is not as clear. Number three, if you don't have a repeatable system, you will not become profitable. At the end of the day, trading is all about having a profitable, repeatable system. Now, a lot of traders have a profitable system, but they might not have a repeatable system. What this means is that yes, you might have a statistically profitable model, but if you can't execute it on a consistent basis, such as, okay, I have to trade the 1 minute chart, yet I have a full-time job, it's not repeatable enough. So therefore, you might have a profitable system, but that does not mean that you will not become profitable. But that does not mean that you will become profitable because it's not repeatable, right? You need something that is repeatable. Number four, forecasting is the most important process that you can do. Start it today. If there is one process that I want you to take away from this video, is that you need to forecast every single day, which means before your market session, before the market open, for example, I trade NASDAQ, before 15 minutes before the open, I am recording a video saying exactly what I'm looking forward to executing on. And if the market doesn't do exactly what I said was going to happen in my forecast, then I don't execute. Because forecasting is pretty much as non-emotional as you can be, right? Because you're looking at the charts, you have no position, and so therefore you can say, okay, if the market does this, then I'm going to execute on this entry model. If the market does this, I'm going to execute on this entry model. And if it does this, I'm not going to do anything. It's as non-emotional as it gets, is your forecast. So 15 minutes before your session, forecast for a whole year, and you'll see your trading change forever. Number five, your system should tell you when not to trade. So as I said in the forecast, knowing when not to trade is an extremely important factor of you becoming profitable. How many traders do I know that there are amazing when the conditions are very good, when the market is trending, for example, and then once the market starts chopping around, this is when traders get completely out of whack and they get loss after loss after loss after loss. Is because one, they don't have a repeatable system, and two, their system didn't tell them when to stop trading, when not to trade, which is such an important thing. For example, for me, my one focus is direction. So let's say that I'm bullish, and as soon as the market opens, it tanks, right? It goes down and it shows me that it's bearish. I'm just not executing. That's it, right? That's my cutoff point. Number six, focus on the key level you want to trade from before focusing on the entry. Because here's the thing. Your entry models should only happen at key levels. And you know that your entry models are only good when you are at a higher time frame key level. And so a lot of traders are still focusing on the entry model when they should be focusing majority of their time on finding what the highest probability key level on the chart is. Because if you don't have that, you shouldn't have an entry. You don't have an entry if it's not at a key level, right? So spend a lot of your time identifying what that key level is. That is incredibly, incredibly important. 7, if price hasn't reached your level, you have nothing to do, right? A lot of traders, they make the mistake that, okay, I have a key level that is down here and price is all the way up here. So therefore, I'm going to short all the way up, until the key level, and then I'm going to look for my entry model long. I'm telling you, you will lose over the long term if you do this, because when you're adding trades in between from key level to key level, blah, 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 you're just adding confusion onto your trading, and you will not be focusing on the highest probability trades. The highest probability trades are the ones that are coming from those key levels with your exact entry model. If you do that, the likelihood of you becoming profitable is incredibly so much higher. You find the key level, you don't do anything between where price is at right now and the key level you want to trade from, and then you enter on your entry model, which is on your trading plan, right? So 8, a good trade is a trade you executed on correctly and not necessarily a trade that you won. How many of you have gambled and have won? That is not good. It's not a good trade, a trade that you gambled on and you won. Because it's teaching you the idea that, oh, I did this emotionally and it resulted in a win. And that is not necessarily good. A good trade, I don't care if it is a trade that I win or I lose. It's a trade at which I forecast. So I did the process that I told you is the most important for you to do. I forecast it. The market does exactly what I forecasted and I execute. That's as good of a trade as it gets because I followed my process, right? But if you're entering in trades outside of your forecast, outside of your plan, even if they win, that does not mean that it was a good trade. And a lot of traders, they judge themselves on the outcome and not on the process. And I know that this sounds so wishy-washy, but why do you think that most profitable traders say this? It's because it's right. Cliches are not just cliches. Usually they're cliches because they are, in fact, right. Now, that was number 8. A good trade is a good trade is a trade you executed on correctly and not necessarily the trade you won. I can't tell you how many trades I've lost and I was like, yeah, great trade. I'll take this over and over again. Now, point number 9, don't base the quality of a trade on its final outcome. Always know the pros and cons before entering. Here's the thing. Every time you forecast, you have an entry that you are believing that you can enter on, right? This is a high quality trade. A lot of traders, they judge the quality of their trades based on the outcome. Okay, it was a losing trade, so therefore it was a bad trade. That's not true. As long as I stuck to my forecast and I executed on exactly what I forecasted, this was an amazing trade in my books. It's that simple as it gets. If I focus on executing on the trades that I forecast on a daily basis, I will be profitable over the long term. Doesn't matter if it's a win, doesn't matter if it's a loss. And so I base the quality of my trades based on the amount of pros versus the amount of cons. And this comes in the forecast, obviously, but a high quality trade is a trade that has a lot of pros and has little cons. And now you might think, oh, my trade, if it's that high quality, shouldn't have any con. Every single trader has a con, else it would be a 100% strike rate. And there's no trades that are 100% strike rate. Now, number 10, the best trades feel obvious before you enter. I saw this reel which said, oh, if a trade seems too easy, then get ready to lose. I fully disagree with that. You will notice that the best trades are the one where you look back and you're like, oh my God, this was so obvious. This was so good. And usually they result in winners. But again, it's a trade where you look back and you're like, God damn, this had everything. It hit the key level, a market structure shift, liquidity sweep, and then fair value gap, order block, and we move in my direction, right? Everything we've ever wanted is there. And those are very, very obvious trades. It's those trades where you call picture perfect. And you'll see that the best trades are obvious before you enter. The forecast is very obvious. The bias is very, very obvious. As we said, if you don't have a bias within the first 10 seconds, then maybe you shouldn't have a bias. So that's point number 10. The best trades feel obvious before you enter. Now, number 11, the best traders can explain their model in a napkin. What I mean by that is that if I had to tell you exactly what I focus on, I could do it in the palm of my hand. I focus on the direction on the daily chart. I'll wait for 9:30 a.m. Eastern Standard Time open. 15 minutes before, I identify the key levels on the 15-minute and on the 1-hour time frame. Once we hit those key levels, I look for a lower time frame market structure shift on the 5-minute chart. I go down to the 1 minute, or I stay on the 5 minute, depending on the previous trades, and I enter on the 5-minute or 1 minute order block. If I miss the first entry, I enter on the second one, which is a continuation entry. And I could draw it to you on a napkin easily, and you will understand exactly the way that I trade. And I can explain to you the way most traders can become profitable in just one single napkin. But the best traders can explain their model on a napkin, which means if you're now talking about RSIs and this and this and this and this, you are bound to lose. I can promise you are bound to lose if it is too complex. Because again, it goes back to the lesson of if it's not repeatable, you're likely not going to become profitable. So make sure that your trading is simple enough that you can repeat it for the next 10 years, right? That could be another lesson in and of itself, but it's not here. So I'm not going to count that, but that is incredibly important. Now, next one, number 12, maximum 1% risk. If you want to make more money, you have to increase your bankroll and not your risk. Increasing the risk increases the risk of ruin. One of the things that a lot of traders do is they see, okay, I have $5,000. So therefore, if I risk 10%, I will be making $500 per hour. But they don't understand that the probability of you blowing up an account when you're risking 10% is incredibly high. Incredibly high. So your risk of ruin, if you're risking 10%, is pretty much 100%. It's not always going to be 100%, but you need a very high strike rate for it to not be 100%. But that simply means that eventually you're going to blow up. So if you want to make more money from trading, you need to increase your bankroll. This can come through prop firm challenges, prop firm funding. This can come from personal accounts, whatever it is. Increase your bankroll and not your risk. Increasing your risk is the number one way where traders blow up. Increase your bankroll, don't increase your risk, right? That is an incredibly, incredibly important lesson. Number 13, maximum 2 losses per day. 1 loss, usually you're following the process. 2 losses, you can be following the process, but it already starts taking this mental toll on you, which I don't want you to have, because it's likely going to decrease the quality of the trades that you're taking because you enter in this survival instinct of, I need to make money right now. I need to make this back. And I need to make this money back is where you enter in this cycle of very, very quick negative spiral where you eventually blow up. Because when traders want to make the money back, they're not even thinking about winning anymore. They're thinking about not losing. And that is a survival instinct. So you want to remove as much survival instinct as possible. And you will notice that usually is going to take you about 1 day or 1 night of simply not thinking about it so you can come back fresh. I can't tell you how many times I've had a losing day where the only thing that I do, close the charts, move on with my day, and eventually the next day, I'm fine. I'm forecasting again. I'm sticking to the process again. I'm sticking to the system again. And therefore, I become profitable again. So 2 losses a day, because more than that, you're very, 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 very likely to become emotional. And you might say, well, Kimmel, what if the 3rd trade is the highest quality one? Take the day, right? There's going to still be a lesson on this. Number 14, don't move your stops to break even. Move based off of structure. I can't tell you how many traders make the same mistake of moving their stops to break even consistently and then getting tagged out, and then the market goes in their direction. And here's the thing. Let's say that you draw on a key level on the 5-minute chart and you move your stops to break even, but there's still a key level that the market can come back to before it goes in your direction. Again, I can't count the number of times that this has happened to me. If you would have moved your stops above the key level in examples of a short, instead of moving it at the key level because that is break even, you would have still been in. And here's the thing. Taking a minus 0.2 versus taking a break even, it's literally the same. 0.2, losing 0.2 is basically nothing. Right? Losing 0.2 or 0.1 or 0.3 is basically nothing. Think about it. You just take a 1.3R, which are not hard to get, and you are already out of drawdown and you are already 1R in profit. That is amazing. That is absolutely amazing. So don't move your stops to break even. Stop moving your stops based on your P&L. Start basing it off of the key levels that are on the charts. My rule of thumb, 3 key levels in between where price is at right now and where my stop loss goes. Because that gives the market enough wiggle room to go towards those key levels and still move towards my final take profit. Lesson 15, don't reduce risk during a losing streak. Reduce the frequency of trades you're taking by focusing on the high probability ones. So a lot of traders, what they do, and I used to do this a lot. Okay, I go on a losing streak, I lose -1. So therefore right now I'm risking I'm risking 0.5. I don't think that makes any sense, because that just makes sure that I'm in a losing streak way more often than winning. So what I do, instead of reducing the number of the risk that I'm taking, I'm reducing the frequency of trades and focusing on higher probability ones. So a lot of traders, that, like, for example, they take -1, then they take -0.5, then they start going -0.25. Well, think about it. You're already 1.5 R in drawdown, which is not a lot, by the way. Again, one trade can get you out of that drawdown, and you're risking 0.25. If you're risking 0.25, you now need 6 R in total just to get back to break even, right? If you would have continued risking 1 R or 1%, you would have been out like that. You would have been 4.5 R in profit if you would have kept the same risk. So don't get fearful when you are in drawdown. Drawdown is incredibly normal. Every single trader goes through drawdown. So don't reduce your risk during a losing streak. Reduce the frequency of trades you're taking by focusing on high probability ones. Listen, a high probability trade doesn't happen every single day. Point blank, it does not happen every single day. So if you're in a losing streak, what you should do is you focus on the high probability trades. That's it, right? 16, stop trying to be right and start focusing on winning. A lot of traders, they are trying to force their bias into the market instead of trying to win. One thing is having a bias and that bias not playing out. Well, another thing is having a bias and having the ego to force that bias. That's where ego comes in. You need to remove your ego by understanding, okay, sometimes my bias is going to be wrong. And that's fine. I pride myself on my bias, and still sometimes I get it wrong. And I move on. I don't take a loss. Just because my bias is wrong, I don't need to technically take a loss, because the market might not have given me my entry, right? So stop trying to be right and start focusing on winning. Too many traders are doing their best to be right, so their ego gets so attached to their bias that they start forcing things and start focusing on winning. 17, trading is 95% waiting and 5% executing. Become a master at waiting. I would even say that trading is 99% waiting and 1% executing. And at the end of the day, 99% of your time is spending preparing for that 1%. It's the same thing as any other job or any other, especially sports. You train, you practice for that one time, for those 90 minutes where it's extremely crucial for you to perform. And it's the same thing in trading. But your performance happens pretty much every single day on your trading session. And sometimes your performance might be 5 minutes long of just simply moving away. And that is amazing performance, right? So trading is 95% waiting, 5% executing. Become a master at waiting. 18, missing a move is like missing a bus. The next one will arrive soon. And this goes back to being okay with losing, being okay with missing a trade. At the end of the day, NASDAQ is going to move tomorrow. Eurodollar is going to move tomorrow. Whatever market you are trading, it will move tomorrow. Your session will happen tomorrow. It's not a life or death situation. One session is not a life or death situation. You need to keep that in mind. One session is not a life or death situation. So therefore, just because you missed a move, there might be another entry. That's first of all, there might be another entry, or simply tomorrow will give you another entry. The market tomorrow at 9:30 a.m. Eastern Standard Time, well, not tomorrow because I'm recording this on a Friday, it will very likely give you another entry. It will move. The market will open tomorrow if it's a business day at 9:30 a.m. Eastern Standard Time. So missing a move is like missing a bus. The next one will arrive very, very soon. 19, your problem isn't trading psychology. It's a lack of discipline. Everything goes back into you just pushing the button, right? You took a loss. Oh, I need to take another trade to make my loss back. That's lack of discipline and lack of rules. I've already told you, 1% maximum risk, 2 losses in a day maximum. If you take any more than that, it's simply a lack of discipline. It's as simple as that. It's a lack of discipline. It's not trading psychology, right? Now, in terms of trading psychology, lesson number 20, emotion equals reality minus expectation. The higher your expectation in a trade, the higher the emotion you're going to get, right? Because think about this. If you believe that this trade is going to be a win, and you believe that this trade is going to be this massive 3R win, and it actually is a -1, then what is going to happen is your emotion is not going to only be tied into the loss that you took, which was the -1, but the market also stripped you away of the win that you believed was guaranteed. And so if you want to reduce your emotion, reduce your expectations as much as possible. And the way you do that goes back to point number 9, which is don't base the quality of the trades on its final outcome. Always know the pros and the cons before entering. So before you enter in a trade, you already need to ask yourself, why is this trade going to be a loss? Because that is going to reduce your expectations by a lot. If you know why this trade is going to be a loss, maybe we are at a massive key level that the market might reverse from or pull back from. So that is extremely important. 21, consistency is built on the boring stuff. Everything we said here, the process, forecasting every day, executing on the forecast. If the market is not at your key level, don't execute. If the market is proving that your bias is wrong, then simply don't execute. Those are all boring stuff. But becoming profitable is that boring stuff. Making tens of thousands of dollars from trading is that boring stuff. Number 22, most of you would be profitable if you cut out the stupid trades that are not in the plan. Again, if you stop trying to make trading exciting and keep it boring by doing the same thing over and over again that is in the repeatable system that you have created for yourself, then you are very, very likely to become profitable. A lot of traders, when they're at this break-even stage, they ask me, hey, Kimmel, I'm at break-even. How can I become profitable? And I say, just cut out all of the trades that you should not be taking, and very, very likely you will become profitable. You'll see that most things keeping you unprofitable are trades that you should not be taking because they're not in the system. It's not because they were losers. It's because they were not in the system. 22, most of you would be profitable. Oh, that is already done. 23, returns is not everything that matters. Returns versus maximum drawdown is incredibly important. If you want to become a professional trader, one of the things that institutions will look at is not only how much you made, but how much your total drawdown was. What is your return on max drawdown? So for example, if you made 50% in a year, yet your maximum drawdown was 50%, then you only made a 1-to-1. That is very, very risky. You want a very, very high return versus the max drawdown. You need to keep that in mind because your drawdowns should be way smaller than your upswings, right? That's when you know that you have a profitable strategy. So make sure that you reduce your losing streaks, and you do that by focusing on higher probability trades when you go into that losing streak. Keep that in mind. That is incredibly, incredibly important. 24, go up one time frame if you're unhappy with your trading results. A lot of traders, they're unhappy with their results and they're trading the 1 minute time frame. If you're trading indices, you should be trading the 5 minute time frame if you are unhappy with your 1 minute time frame results. And if you're trading FX on the 1 minute or 5 minute and you are unhappy with your trading results, you should be going towards the 15 minute time frame. 5 minute on indices, 15 minutes on FX are probably the best time frames for you to trade. And I say this as someone that trades the 1 minute on indices, but again, I'm very, very happy with my trading results. And if I enter in a losing streak, guess what? I go to that 5 minute time frame. Where are we at? We're at 24. 25, trading profitably is just a matter of having a profitable system and executing it for a long enough period of time. Again, profitable, repeatable system executed for a long enough period of time. It does not matter if you have a profitable system, your next month can be unprofitable. Because a repeatable system doesn't say that you can guarantee your results over the short term. It means that your results are predictable over a long enough period of time. Think about it. A coin flip can land 10 times tails in a row, but you know that over 1,000, it's very, very likely to go to the 50-50. Right? So you can't predict short-term results. Your system is able to predict long-term profitability, not short-term. So you might enter in a 10-trade losing streak. That doesn't matter because the long-term is what matters. So yeah, just profitable, repeatable system and executing it for a long enough period of time. 1 month, 1 quarter is not enough to say that you're profitable or unprofitable. Just take it over 1 year span of time. So instead of judging your results of what happens in the first month of 2026, just judge yourself by the end of the year. A quarter is also very, very good. In 26, to get the results you want, you need to do the things you haven't done yet. I wanted to finish this off here because maybe you heard things here that you thought, oh, I haven't been doing this. Maybe I should. Maybe you should. You need to forecast every single day. If you're not forecasting every single day, you're very, very likely going to have a tough time in becoming a profitable trader. And so therefore, to get results you want, you need to do things you haven't done yet. Master your trading risk, master your trading performance, and make sure that you focus on the long term. Hope you enjoyed. See you in the next one.